Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, it's a great time to be a commodities producer, both hard or soft. Firstly, the latest USDA WASDE review continues its reporting of lower US milk output and higher prices. Beef prices there are unchanged in this February report. And markets are waiting for tomorrow's US Consumer Price Index number. They expect a headline January level of 7.3%, up from 7% in December, and a core rate of 5.5%, up from 5% in December. Outside these expectations, expect some market repricing. Locally, financial markets are awaiting Friday's RBNZ Inflation Expectation Survey results. But today is all about commodities. The aluminium price has raced higher to record levels. It has doubled in price since mid-2020 and is likely to go much higher because China and others are shutting capacity to meet environmental standards. Those left are in a prime position because this metal is key to many new technology-driven green products like Tesla cars. Also rising for similar reasons are cobalt, nickel and tin, and zinc is getting up there too. Surprisingly, coal is also in hot demand and its price is near its record high as France decides to use it rather than Russian gas or oil. And the spot carbon price rose sharply yesterday locally to now be at $81 a New Zealand unit. That's an 8% rise in just 1 week. And speaking of commodities and energy, we should note that overnight a test site for the giant ITER fusion facility being built in the south of France produced results that almost guarantee nuclear fusion is now a viable energy option. In Australia, the apparent improvement in their pandemic numbers was expected to improve the mood of their latest Westpac Melbourne Institute Consumer Sentiment Survey. But it didn't. Opening up isn't a mood changer, it seems. The Australian consumers have moved on to worry about inflation and higher interest rates. And there was a notable High Court decision in Australia out yesterday where they confirmed an earlier ruling that judges can't set aside any contract just on some external social view. It also means that in Australia, owner-operator or contractor agreements will not be overturned to become employment agreements. The gig economy gets a boost from this ruling, and labour is confirmed as a contractable commodity. The US Treasury 10-year yield opens today at 1.91% and 5 basis points lower. And the price of gold starts today at $1,833 an ounce and up another $6 from this time yesterday. However, oil prices are little changed at just over $88 a barrel in the US, while international Brent price is at $90.50 a barrel. And the Kiwi dollar will open today a half a cent firmer at 66.9 US cents. Against the Australian dollar, we're unchanged at our lower level of 93.1 Australian cents, but against the euro, we're firmish at 58.5 euro cents. That means our trade-weighted index starts today at just over 71.2 as commodity currencies gain some favour. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.